Let's welcome Courtney Garcia, a senior wealth advisor at Payne Capital Management. Courtney, it's good to have you. And, kind of to the larger macro point, I guess some say the S&P needs to go down maybe to 16 or 15 times. But I guess either way you look at it, much of the reset has already taken place.
Yeah, I think that's the question, right? Because the price to earnings are now at 17, which is still actually well below the 5-year average. It's not quite to some of the longer term averages. To your point, some people want to see it more like 15 or 16. But either way, it's so much more reasonable right now. And ultimately, what's going to drive the markets is earnings and profits, which are actually still relatively strong. And I think that's exactly what you're seeing here is when valuations are coming down this low, you're seeing people coming to buy back in and take advantage of those valuations. And it's ultimately really kind of keeping some of that downturn at a minimum.
So while some are looking at the market and saying, OK, I want to stick with energy because of my view on the tightness of that market, you're kind of looking at, style, almost we could call it, balance sheet. What are the names that jump out to you here as good investments for right now and why?
Yeah, and I do still like energy. I just want to kind of throw that out because I do think what's happening right now is we're seeing maybe inflation has peaked. And that's really one of the reasons the markets are having a positive week this week, which is great. But inflation peaking is not the same as there being no inflation. So I do think you want to look at some of those hedges, energy being one of those, but also things like materials can be a really good opportunity. So like BHP Group is a really good example where it's a really well-diversified company in things like copper, iron, coal, et cetera. And if inflation does kick in, that's going to be your hedge against that. But also, you're looking at places like China are actually about half of the demand for things like iron and copper. Their economy is still not even open yet. And so I think as a lot of that can lead to more demand, this can really start to improve here that kind of regardless of where the economy is going, I think you want to make sure you have some of those positions there that will do well either way.
You also like Deere. You like Merck. And one of the other sort of things about this week that has been interesting is wondering whether we get into a situation where reopening names, travel names, consumer discretionary names get back to the leadership and something like healthcare goes back to its traditional backseat.
Yeah, and you do need to make sure you have a well-diversified portfolio here. I do think seeing some of your consumer discretionary, if the consumer is still in a good place, and I actually am under the impression they are, you do want to make sure you have those positions in there. But something like healthcare, I do think is going to continue to perform. Like I like that Merck, for example. They have some really solid revenue drivers like Keytruda and Gardasil. What I also really like about them is they're getting really into the animal health industry. And that's something that people are going to spend their money on regardless of what's happening in the economy. And I think that that's actually really promising as well. So I think just look at some of these companies here, which regardless of where we're going, I think they're a good place that you can put some of your money right now.
What about the home builders? And I'm throwing that curveball at you because they are trading at just incredibly low valuations. And Stephen Kim last hour just made his case once again for why he thinks these stocks are going to perform much better than the market's currently expecting.
I'm going to go out on a limb, but I do actually like the home builders here. I think they're probably got a lot more negative sentiment than is justified. So you are seeing so much demand here. There's still an entire generation that wants to get out and buy their first homes and get into the home market. But there's still so much more demand than there is supply. And even with mortgage rates coming up, that demand is really not coming down. So I actually do think your home builders, it's a longer term play, but I'm actually pretty interested in that as well.
All right. Courtney Garcia, a vote of confidence for the builders and some other names. Thanks for your time today.
Thanks for having me.